Okay, I checked again. I hope you can hear me now. I am looking at the Australian index AXJO using the Q Global at a glance template, weekly, daily, weekly on the left, daily on the right. AXJO was inside a range and that is continuing. Are you able to hear me now? It will be sad to continue and then find out that the sound is not being recorded. Okay, let me continue. I hope the sound is being recorded. AXJO was inside a range and it is continuing inside a range. That is clear in the daily as well as the weekly chart. Let's look at the Japanese index topics. Thank you, John. If we look at the daily chart, in a way it is moving inside a range if we step back a little bit. Though this week it went up strongly, in the weekly it broke out of the memory resistance level. It came to the watermark resistance level in the weekly. That is why we are seeing the box in the daily chart. For short-term trading, it is bullish. Both weekly and daily are bullish. However, it is at the upper boundary level, that is overbought, also shown by the stretch signal in the daily chart. That is not a point where I like to buy. It is bullish, but for me it is overbought. Rather, because it has come to watermark resistance which was created by a bearish headwind signal, if price tilts down from here and gives a stretch release signal that will appear on the band indicator and also on the candles, then we may look for a double top or box short setup in topics if that happens. Let's look at the Chinese index CSI 300. It was moving inside a range in a triangle pattern in the daily chart that is continuing. The weekly is also moving sideways. India market, that was in an uptrend. In the weekly, it is still in an uptrend. Last week I mentioned that the backdrop color had changed for 2 weeks from bullish to neutral. This week again it had a neutral color. In the daily it came to the watermark level created by the bearish headwind signal. Then it came down on Friday. However, it closed above the memory support line. If it can break below the daily memory support, then one may look for breakout short candidates in individual stocks. This was the most bullish of the global indices. FTSE index was in a sideways range also, UK FTSE index, and that is continuing. Therefore, India market was and still is the only global market that is bullish for the short term. USA market was bullish and that is continuing. And to study that, I am switching to Q Elite on TradeStation. I am going to use the market ETFs and let's look at the weekly interval first. Here I have the 4 ETFs using weekly interval. 2 of the ETFs went up this week, that is DIA and SPY. IWM and QQQ decline. And if we look at Friday's performance, that is using the daily interval, then IWM and QQQ decline again. So weekly period as well as daily period is showing that small caps and tech stocks are weaker. IWM was weaker earlier also, small caps. However, tech stocks, QQQ used to be the strongest, that is relatively weaker this week. Why relatively weaker? Because it is still very strong. We'll look at QQQ. Let's look at SPY first. That is on the chart already. It went up this week. Didn't change much from previous week, but went up slightly. It is remaining at the upper boundary level and it is remaining above the memory support line. If you watched SPY during the week, then you would know it tried to break the memory support on 4 of the 5 days. In fact, on Monday also. You can see the long lower tail. It tried to go to the memory support, might try to breach it, but could not succeed. Memory support is holding very well. It closed very close to the memory support on Friday. Similar to Nifty, if it can break below the memory support, then we may look for a breakout short trade setup in individual stocks. However, before that breakout happens, it is very likely that it will go up at least a bit to hit the previous all-time high. In the last market roundup also, I mentioned that it was likely that it will hit the last market high. That didn't happen, though SPY went up. So this week that possibility is still there. As I mentioned in the previous roundup, if it hits the watermark support that was created by the bearish headwind earlier, from which price fell sharply, if it hits and goes above that and then turns down, closes below the same resistance, that will create a false upside breakout, and those tend to give lucrative shorting opportunity in weak stocks, weak fundamental stocks. We'll try to look at some weak stocks anticipating such a possible false upside breakout. Overall, we have to say SPY is bullish, however extended to the upside, not a QA to buy SPY right now. Now Nasdaq ETF, QQQ. Here you can see the backdrop color changed to yellow. SPY was bullish, cyan. Nasdaq weekly color changed to neutral, however the candle shape is indecisive and daily has these memory support lines that I have been showing for several webinars now, that the memory supports are there in probably all the market ETFs. That's why I was not in a hurry to look for short trades. I may shortlist some candidates but may not rush into taking shorts because the market is clearly bullish and supported by memory support lines. Dow Jones ETF DIA. This is also bullish color in weekly. In daily, again it is bullish for sure, extended because it is above the upper boundary level. And IWM, this is also having bullish backdrop color. In daily, it is at the upper boundary level. Out of the 4 market ETFs, 3 of them are having bullish backdrop color, and in daily all of them are bullish. Only QQQ is having neutral backdrop color, but in daily chart everything is bullish. The market ETFs show clear bullish picture, extended but bullish. Let's look at the sector graphs. In the last market roundup, I mentioned that the up down move was ending. This is a picture from 1 week ago. This is a week to week sector comparison. The red bar represents this week's performance and green bar previous week's performance, and this is a snapshot I shared in the previous market roundup. At that time, all the sectors went up, all the red bars were to the right of the zero line. That was switching to very bullish picture from a mixed picture, because in the prior week some sectors were up, some sectors were down. If the up down move was there, then this week would have been bearish. Let's see how this week ended. This is the same week to week comparison of the 11 sectors, a picture from the current week. 7 sectors went up, 4 went down. So it is not bearish, overall it is still bullish. Not as bullish as 1 week ago. The green bars now represent previous week's performance. That time all sectors were up, 11 sectors. This week not as bullish as that, however still bullish because 7 of the 11 sectors went up. Which ones went down? And if we look at them, we get a mixed picture. Utilities and real estate. They are considered defensive areas, non-growth stocks. Usually they consist of non-growth stocks. The other two sectors that went down, these are infotech and healthcare. They usually consist of growth stocks. So we have a mixed picture that both non-growth or value stocks as well as growth stocks came down. Several of the sectors are now strong for successive weeks, very strong in fact, and these are consumer discretionary, energy, materials and industrials. The green bars and the red bars all are up by significant percentages. They are very strong. If you followed Q edge sector industry rotation, then you could catch the energy stocks just as they turned around. This sector picture is also bullish. Let's now look at the sector picture from Q edge home. Here we can see the advanced decline for the sectors, industries and stocks over 5 days, 2 days and 1 day. 5 days is bullish. The green portion of the pie charts are bigger. Over 2 days, that is over Thursday, Friday, it weakened. The red pie charts became bigger. On Friday, it again became more bullish than bearish. So it seems that on Friday, just as SPY hit the memory support and went up from there, the stocks also reversed. If you kept an eye on Q edge on Friday in the real-time streaming mode, then you would know that this was more bearish during the day. However, as the day was approaching to a close, the market rallied, recovered, and the pie charts also became bullish. If we look at the lower bar chart, then we can see over 1 month, it's very bullish. All the sectors are up. Over 2 weeks also, all the sectors are up. And this week, 7 sectors are up, 4 are down. If we look at Friday, again 8 are up, 3 are down. So overall, it is bullish. It is probably difficult to take short trades and profit. More difficult. Can we take long trades? That may also be difficult because we saw the market ETFs are at an extreme. Another thing we may look at, let's have a look at the market ETFs one more time, and this time I am adding the thrust and jump indicators on the weekly chart. For IWM, thrust is at an extreme, jump is near the very extreme. DIA, same picture, thrust at red dot, DIA approaching there. QQQ, same picture. And SPY, same picture. SPY hit the red dot 1 week ago. So they are at an extreme level. The stocks that were strong, they may also be extended. It may be difficult to find low risk buying opportunities. We'll try to find some. Let's see if we can find. During the weeks when I don't find many long ideas or many short ideas, then I know market is telling me to wait for the opportune trades, and this may be such a week. We'll find out more. We looked at the sectors that was bullish overall. Market ETFs are bullish overall, however extended. Let's look at the Q finder. This is the Q finder picture for the weekly interval that shows a balance between the Q bearish and bullish signals. If we look at all the signals, it is clearly bullish. Strength signals are also bullish. Continuation signals are also bullish. However, reversals are showing weakness. Therefore, if we are looking for shorting opportunities, we may look for reversal signals. And that is in line with what I discussed when I looked at the market ETFs, SPY especially, that if SPY makes a false upside breakout, then we may look for a box short setup. And the box setups are included in the reversal signals. We may get ready with some candidate shorts from this. That is the weekly picture. What about the daily picture? I ran Finder on the daily interval also, that is Friday's interval. Here we see that though the sectors were stronger overall on Friday, in terms of Q signals, it was slightly more bearish than bullish, except reversal signals. This is kind of mirror image of the weekly picture. In the weekly picture, all the signals were bullish except reversal signals. Here all the other signals are bearish and reversal signals are bullish. That might have happened because SPY came close to the memory support and went up from there. So if we are looking for bullish signals, we may also look for reversal signals. It's a unique case probably where the weekly picture is also telling us to look for reversal trades, however bearish side, and the daily finder is telling us to look for reversal trades on the bullish side. We may look at both. Overall, we have to say when we look at the weekly picture that the week is bullish. Q finder is saying that overall it is bullish, and Friday it is slightly bearish. Let's look at then how the sectors did on Friday. And this is a snapshot I got from Q Edge. Energy is continuing to be very strong. It was the best performer on Friday. And the sectors that were down for the week, three of them, infotech, utilities, healthcare, they were down for the week and they were down on Friday also. Real estate was down for the week, but on Friday it slightly went up. Energy, consumer discretionary, financials, they are the strongest. Because in short-term trading, we are looking for immediate signals. We may look for buying opportunities from energy, financials, and consumer discretionary. If we are looking for shorting opportunities now, then we may look for them in infotech, utilities, healthcare. Infotech was strong for a very long time. Therefore, if we find a shorting opportunity in infotech, that may prove quite lucrative. Financials was weak for a long time. If we find a buying opportunity, that may be quite lucrative. That is a look at the ETFs, sector level and finder level. Now let us look at gold and oil. Let's start with oil ETF, USO, not that one, this one, USO. As I expressed in several recent webinars, in the daily chart, it is moving inside a very narrow range, oil ETF USO, unless it breaks out and then gives a low risk buying or shorting opportunity. I'm not going to take any directional trade in oil. Interestingly, the weekly is continuing to be bullish for several months now. Since the time the bullish headwind appeared in the weekly chart, price didn't come down. Last week, I mentioned there was a memory resistance in weekly and memory support in daily. And I wondered whether the resistance will be more powerful or support. The resistance is broken now. Does it mean that the bullish side is more powerful? I am not saying that, because in daily chart it is moving in such a narrow range, it is not conclusive that the bulls are very strong. I will avoid taking any directional trade in oil until the direction is clearer. Gold now. Gold was very strong. In the previous webinar, I mentioned about the bearish headwind signal in the daily chart. Because that candle had a lower tail, I suggested not to take any short trade using the headwind signal, but one could take a short trade next day using fine-tuned chart, and that would be extremely profitable. Now in the weekly chart, it came very close to the memory support and tilted up from there. We may not take any short trade now. The next short trade may come if it goes up little bit and comes down, giving us a magenta color candle in the daily chart. That may be a go with flow short trade setup, provided the weekly also changes color by that time to magenta. If you are seeing that go with flow setup, you may keep the memory support in mind and calculate the reward risk. If the reward risk is not attractive, then we may not take any short trade. It is always better to avoid shorting an instrument when it is near a memory support. Just like it is better to avoid buying an instrument when it is near memory resistance. Let's now try to find some trades from different angles. For some time I have not looked at the inside stocks in the webinars. Let's have a look at them now. And let's see if we can find easy trading candidates. Easy meaning low risk and having a proper Q trade setup. CNX is one stock that I traded earlier. I exited with a small profit. It has come again. Let me exclude that. Let me open the other stocks. These are undervalued stocks that went up strongly on Friday. I'm going to open them using Q Global. Console Energy. This is very near the memory resistance. As I mentioned just now, when an instrument is near memory resistance, I'm not going to buy it. And these are all best performing undervalued stocks. So these are not for shorting, only for buying, but there is no technical buy setup. I'm going to close this one. I closed the second one by mistake, no problem. MCK, this went up strongly on Friday. However, it is also near a memory resistance. I'm not going to buy it now. If you kept an eye on this stock, you could buy it on Thursday's close because it was inside a range, and when a stock is inside a range, the best trading opportunities are at the edges of the range. When it came to the memory support and found support on Thursday, you could buy it, putting stop just below the memory support here. This should be the buy point. and as price went up strongly, hit the upper memory resistance, you could book partial profit and see if it can break out of the memory resistance this week. Now it is a bit late to take any long trade. I will close this. VREX, this has no Q trade setup in the long direction. The traffic light candle color is still red. Not going to take any trade here now. LQDT, it is very bullish but too overextended, much above the upper boundary level. I'm not going to buy it now. Looking back, I can see that the bullish headwind caught the very low. If a stock that is fundamentally strong, and this stock is fundamentally strong, undervalued stock, when it displayed the bullish headwind and went up, you might not take that headwind long setup because stop would be very far away. Instead, you could wait and try to take the next bullish flow candle. That would be the next buying opportunity. I can see there was a bullish flow candle here and another one here. Let me keep an eye on this. I will come back to this stock using the stop signal to see whether the first entry would be stopped out or not. Even if the first entry was stopped out, it would make sense to take the second entry, and that would make a very large profit. Both the cyan color points gave a valid go with flow long trade setup on the daily chart. We have to look at the weekly as of that time, but at least on daily chart both of them gave a buy setup. I will come back and look at it using the stop loss chart. LQDT, let me keep this chart. Now APEI, this was inside a range. At the lower end it had memory support, at the upper end it had watermark resistance. It strongly broke out of the resistance. Q traders would not take a long trade on the breakout time. Firstly, because it had a very long upper tail. Secondly, the stop loss would be far away. Then it pulled back, didn't go down much, and on Friday it gave a cyan color candle. It is at the upper boundary level. However, if you are thinking of a breakout and then pullback and going up again kind of trade setup, then this may be a valid long trade setup. APEI. Let me keep this chart open. I will look at its industry later. MSTR. This is also bullish, but it is too overextended. It's not my style to take a long trade in such a stock. TWI, also close to the upper boundary, not breaking out of a range as was in the last stock I selected. Not my style to buy this stock also. CNK, Cinemark Holdings. This could be considered a breakout trade setup. However, when a breakout happens in a stock that is in a downtrend with lower high, lower low, I prefer to take the breakout if it is accompanied by heavy pressure, bullish pressure or high volume. None of those are true. Therefore, I may not take a breakout setup in a stock in a downtrend like this one. If it was inside a triangle pattern and then breaking out, then I might not look for bullish pressure or activity. But if it is in a downtrend, like in this case, then I will consider a breakout only if it is accompanied by bullish pressure or heavy activity. That is not true. So I'm closing CNK. Okay, that is FTSE index. Let me close the FTSE index that was open. LQDT. Here I wanted to check the stop loss for this entry and this entry. Let's use the Q stop level and Yes, if you use the Q protection signal, any entry on this cyan color candle, why that cyan was important? Because we had a bullish headwind on this long bullish candle. We might not take a long trade there, but after it pulled back and gave a bullish cyan color candle, that tends to be a low risk buying opportunity. So if we bought that, then we would put stop here using the Q protection signal just below the recent low. And if you placed a GTC order, that will get stopped out. If we watched for the market to close below the stop to decide your exit, then you would not get stopped out. On a closing basis, price didn't go below the stop, but on intraday basis, price hit the stop. That is fine. Sometimes we may take a loss using Q stop signal, which will let us take a small loss. And then again, a bullish flow candle came here. That would be the next entry point. Sometimes some traders avoid taking a trade in a stocks where they had a loss recently. That is not the profitable approach in my experience. If you are following a system and technique, and if the technique is telling to take a trade and the stop loss is narrow, then you may just take the trade without trying to second guess. And the second entry, of course, would make much more profit than the stop, than the loss in the first trade as well. I wanted to repeat one more thing. When the bullish headwind comes, if that doesn't give a low risk buying opportunity, you may keep an eye for the next cyan color candle. And if the daily, weekly are both showing bullishness, then those cyan candles after the bullish headwind usually tend to give a very nice, attractive, lucrative buying point. Currently, as I mentioned, it is too extended, LQDT. Another stock I kept, that was APEI. And this is a breakout trade and pullback after the breakout and then going up again on Friday. If we decide to buy the stock on Friday, then the stop would be just below this recent low. And we may book profit at this previous peak or as soon as the risk distance is covered, which will happen earlier. Before buying, we may check this industry strength, APEI, and also carry out a full fundamental analysis. Therefore, from the undervalued best performing stock, we only found one possible buying opportunity, APEI. Let's carry out a full fundamental analysis using Q Vital. While it is retrieving more data, I may check out its industry education services using QEdge. QEdge is showing that its relative strength is improving. The score is changing from magenta to cyan. And if I look at the industry percentage tab, I see that not only relative strength, the absolute performance is also positive over many periods now. Therefore, the industry strength is allowing me to buy a stock in education services. Let's look at its fundamentals. Still retrieving the data. While it is retrieving, let me go back to the daily chart and click my menu icons to look at it using the standard weekly daily chart. And the weekly is also bullish, and it also broke out of the watermark resistance. Therefore, it might have been a valid trade setup, not strictly speaking a go with flow long trade setup, but a breakout and pullback after breakout kind of trade setup. It also had strong bullish pressure, high volume, not extreme high volume on Friday. However, weekly also has high bullish pressure, and here we have very high volume. So the charts are looking bullish, allows us to take a long trade. Let's go back to fundamentals using Q Vital. Undervalued stock that we knew already, robust earnings quality. And here we have positive and accelerating earnings growth. This is what we call star buying candidate in terms of fundamentals. Is robust in terms of valuation as well as immediate earnings growth, pays no dividend but makes money. Earnings is over because next earnings is due on 10th November. On Friday, the industry was mixed. 57% went up, 40% went down out of 35 stocks. Before deciding on APEI, why don't I look at its peer stocks? We saw APEI is undervalued and strong earnings growth. Therefore, I'm going to look for similar stocks, star buying candidates, and I have two more. Out of them, APEI went up by the biggest percentage on Friday. One went down, so I'm not going to look for a buy setup there. Let's look at STRA. That is also undervalued and have nice earnings growth. Not as great earnings growth as APEI. In terms of fundamentals, APEI is looking better. Let's look at the chart still. STRA. STRA.O. This is not giving any immediate buy setup. If it comes back to this memory support, at which point it will also come to the weekly memory support and reverses from there, that will give a very low risk buying opportunity. One way to take the bullish trade will be to buy the stock, of course. Another way could be to short the put if you are willing to hold the stock anyway. Short the put or short put vertical. Or you could use synthetic stock also. You may keep an eye on the stock. If it comes to 110 around this memory support and bounces from there, it may give a low risk buying opportunity. I will not buy right now. So if we wanted to buy any stock in this industry on Friday, then APEI, American Public Education, seems to be the one. Not many stocks we found, right? Sometimes QH gives us a lot of buying candidates easily. We found one, but that is not a Q trade setup. Maybe a valid trade setup, breakout and pullback, but not a Q trade setup. What about the best performing growth stocks? One thing you see before even opening the charts, if you look at the percentages, best performing growth stocks, the percentages are much smaller, 2.97 to 1%, whereas the best performing value stocks were up by 8.3 to 4.1%. If you keep an eye on these two groups, you may have an idea whether growth stocks are doing better or value stocks are doing better, because these are the best performing growth and value stocks respectively. Still, we may look at them, and this time I'm going to look at the best performing growth stocks using Q Elite. Therefore, instead of clicking the chart icon, I'm clicking the grid or radar icon. Go to trade station, go to my sonar, that is radar, delete the existing stocks and press Ctrl V to get those stocks here, the best performing growth stocks as of Friday. And I am going to look for any bullish signal from these columns. Green will mean bullish. There is a breakout setup in ZUMZ. Let's look at that. It has broken out of one memory resistance, but there are several other resistances nearby. That's why it's not giving a breakout setup now. If I delete that, there is no bounce headwind box go with flow setup. there is one stock THC that is touching memory support. Let's have a look at that. It is touching memory support. It is close to the upper boundary, and also the flow color is not bullish. That is why I'm not going to buy it as of Friday's close. If I tracked it using sonar or using QH, sonar means radar on trace station, if I tracked it and I found the stock right when it touched the memory support and went up, I could take a long trade at that time, and that would be using the fine-tuned chart. Let's look at the fine-tuned chart. This is the fine-tuned chart. When it opened here, initially went down. After that, somewhere here it hit the memory support. Let's look at that, exactly where the memory support was there. I'm going to change the interval to daily and draw a horizontal line. This was the memory support level in the daily chart on Friday. Now change it back to 5 minutes. This is what I wanted to show. A very low risk buying opportunity. Price opened here, the blue pivot. It initially came down. We were aware of the memory support. We were not looking for any short trade. Fundamentally also, this is one of the strong growth stocks. We were not going to short it. Then we saw the bull release signal. We saw the traffic light color changing to neutral from bearish red. The candle shape was bullish and it had bullish pressure for 2 candles by then. The previous candle had bullish pressure, but the traffic light was red and also the bull release signal was not there. We would not try to buy on the red candle. Using the stretch signal, it's kind of the box setup on fine-tuned chart. Using this reversal setup, we would buy at this point and put stop just below early range low, which would be below the daily memory support line. And once it went up, hit one of the pivot levels where risk distance was covered, we could book partial profit and let the trade play out after that. It never came down much, therefore we could continue to hold partial position. That is how, if you track the stocks using trade stations radar or sonar, if you see a touch opportunity on the daily interval or a bounce or box, any of those opportunities, then you may look at a glance and then fine-tune chart to see if there is any low risk entry opportunity, precise entry opportunity, as we had in THC. Now there is no entry opportunity. If you look at the weekly, daily, using fine-tune and using the radar or sonar, you could take a long entry in THC. Anyway, as of Friday's close, we don't find any Q trade signal here. One is there, reversal candle. Let's look at that AEL. Let's see if there is kind of buy setup using the reversal. No, it had a reversal candle that is showing up here in the dot indicators. However, it is right in the middle of a sideways range inside a white triangle pattern. In the middle of the range, I am not going to buy the stock. I would rather buy if it comes to the support and goes up. I would rather short if it hits the resistance and comes down. Now there is no trend. So we looked at the QH insights, best performing growth stocks, best performing value stocks as of Friday. Didn't find many buying candidates. Let's look at the stocks in another way. I'm going to the QH stocks and looking at the 3-star candidates, buying candidates, that is having excellent valuation and earnings growth both. And let's look at the stocks moving up by more than 2%. Sometimes you will see this list has many more stocks than this number that are moving by more than 2%. This Friday was not that bullish. I'm going to open it with Q Global, therefore I'm closing the existing charts. Click the chart icon. Let's see if the star buying candidates instead in terms of fundamentals they give any lucrative buying opportunity. RCII, no, because it is at the upper boundary. Closing. CACI, it's above upper boundary and also it has a long upper tail. No buy setup. Closing this. UNFI, it is moving sideways. There is no trade setup. Closing. Kroger, KR, has an upper tail right at the memory as well as watermark resistance. No trade setup. Close. THC, we saw this earlier. If we watched it using radar or QH during the early morning session on Friday, we could take a long trade using fine-tuned chart. Now there is no trade setup. Closing. RC at the upper boundary level. Also traffic light candle color yellow near watermark resistance. For many reasons, there is no Q trade setup. Closing. UCTT. This is looking stronger. This is again a trade where it is breaking out, pulling back, in this case also hitting memory support and giving a bullish flow candle. Similar to the education stock that we found, in this case we also have the memory support. Difference is the education services stock was undervalued stock and this is a high growth stock, UCTT. Let me keep this one. Actually, this is undervalued as well as high growth. In fact, the education stock was also a star candidate. So we found two buying candidates. I'll come back to UCTT and look at its industry and at a glance both. Next one, SXC, Suncoke Energy. This is looking interesting. I may not buy it using weekly daily because there is a memory resistance, but next week if it can go up, there is a possibility to buy it using fine-tuned chart. This is a very strong fundamental, both value stock as well as growth stock. Alternatively, if it comes to the memory support and stops there, that will be an even more lucrative buying opportunity. Sometimes people may also short out of the money puts, but I don't prefer to do that. I would rather it come down little bit, stop at the memory support and then short the put or short put vertical. Or if it can go up on Monday, I may keep an eye on it using fine-tuned chart. Not an immediate buy setup here. CYH, traffic light color red in the daily, not going to buy it. AM, traffic light color neutral at upper boundary, not going to buy it. By the way, AM is a stock that was shared by another Q trader in the traders forum. So it seems to be doing well. Partial profit could be booked by now and partial position could be held. It was not my idea, another Q trader shared it. LQDT, no, too much extended to the upside. APEI, we already saw this stock, the educational services stock. This is too overextended. MicroStrategy, MSTR, and there is a memory resistance. It's not a breakout, pullback and going up kind of setup, not my kind of trade. Bullish but not low risk for my style. Back to UCTT. So we found UCTT other than the educational services stock. Let's look at it using at a glance chart. This is looking bullish, both using weekly and daily. Let's carry out a full fundamental analysis for UCTT. UCTT Q vital UCTT.O semiconductor equipment. Let's check its industry. The industry is not showing strength. Therefore, though fundamentally it is strong, technically it is strong, I will avoid buying UCTT now. I try to align all the forces. I found a stock APEI combining forces from industry level, fundamental level, technical level. For UCTT, technicals are good, fundamentals are good, but industry is not looking good enough for me. So I will not continue to look at further detail from Q Vital. No point, because I know I am not going to buy it. So not many stocks we found so far, on buying side at least. That is what happens when the market tells us to not keep on buying stocks. We saw it on the ETFs also, it is extended to the upside. Should we look for some shorting candidates? Let's go back to Q Finder Weekly. The reversal signals were more bearish than bullish. Let's go to the bearish tab. Let's look for headwind setups. Many are headwinds, and let's see if any of the headwinds are also memory touch and bounce. Only one, franchise group. I'm going to close the existing metastock charts. Open franchise group. Let's look at it using at a glance chart. The weekly has a bearish headwind and memory resistance. Daily also came back from memory resistance after displaying the bear rally signal. Now if it goes up again, hits the memory resistance and comes down. Using fine-tuned chart, we may precisely enter a short trend. FRG, we may try that only if the fundamentals are also weak, industry is also weak. Let's check that out. FRG, go back to Q Finder and click the peer analysis button to check its fundamentals using Q Vital. Specialized customer services is the industry. While it's retrieving data, I may check out its industry from Q Edge. Industry is not looking strong. Therefore, I will not continue to investigate further. That is why I don't try to find bullish signals and convince myself that yes, I can still take a trade. The moment I see something is weak, I stop investigating that stock further. So I'm not going to look at Q Vital anymore. Franchise group is not going to let me take a short trade. I am deleting it. Let me see if there are any box setup with headwind signal, and I can see 3 stocks. Let me close the existing charts. Okay, in fact, let me change the template to weekly, daily both, because I am looking for bearish headwind in the weekly chart. So I am going to open 3 stocks using at a glance template. QIWI. QI. It has a bearish headwind. However, it has a memory support nearby in weekly and daily both. Not going to short it now. Close this. MTBC also has memory support in daily. The weekly shape is indecisive. Not going to short it now. This one is looking weaker. BLFS. It has a bearish headwind, bearish backdrop, very bearish shape. Also a reversal candle in weekly with very high volume. There was another bearish headwind earlier. It tried to go above multiple watermark resistances, very long-term resistances, created a false upside breakout. If you kept an eye on Q Finder, weekly, daily both, you could short it on this day. That would be a box short trade setup. That would be a valid trade setup, shorting it at this point. Now it is down already for a few days. Top would be far away. I will not consider shorting it now. If it can go up little bit next week, maybe if SPY makes a new all-time high, that will lead this stock also, along with many other stocks, probably to go up. And then if it tilts down, then I may consider shorting. In any case, we didn't find many easy buying or shorting candidates. Let me look at two stocks, if I can remember the symbols that I kept in my shorting watch list. One was DKS. It had a similar picture. It had memory resistance in weekly, bearish headwind in daily, memory resistance in daily also. It had long upper tail for 2 successive weeks. This week's candle is also indecisive. So it has 3 weekly indecisive shape candles. In the daily, it is struggling to go up. It has a memory support. So I am aware of that. I found it to be of weak fundamental. So if it can come down, that may give a lucrative shorting opportunity. But I am aware of the memory support. Therefore, I am not suggesting shorting it right now. One may try to short it using intraday fine-tune chart. I think earnings is not over. It is moving kind of sideways. Let's check it out. DKS. Not over. Earnings is on 26th August. Therefore, trading DKS before earnings with stocks may be too risky, at least for my style. If I trade it at all, I may trade it using options. The fundamentals are mixed, we can see. Valuation is undervalued, earnings growth is negative and down very much. If the earnings growth continues to be weak, the stock may come down. It is already at a very high level, may come down, but currently there is no trade setup. And just before earnings, I don't suggest trading any stock using stocks. DKS, the other stock, I don't know if it was SE. SE, of course, I remember. SE was the stock that was $67 billion valuation market cap on this day. It has never produced a single year of positive earnings. Right after that, it displayed a reversal candle, bearish signal, and came down. Now it has a memory support. If that memory support can be broken, that may give a shorting opportunity. In fact, DKS that we saw just now, that fundamental is mixed because it is still undervalued. And I wanted to come back to DKS again. The valuation scores in Q Vital, Q Edge, Q Index, they are not using price movement, because other systems which uses only price movement on charts to decide whether a stock is undervalued or not, they may say DKS is overvalued. At this point, they might have said it is undervalued. They would say it is overvalued now because it has strongly gone up. But that is not the correct way to calculate valuation. Q Vital Edge Index uses true valuation score, and you can see this is one of the cases where the stock is very close to 52-week high. Still it is undervalued, but not so for SE. This is DKS. You can see it is only 7% below 52-week high. Still it is considered undervalued because its performance was strong. On the other hand, if I look at SE, it is also at a very high price point. Let's wait for the data to be retrieved. interactive home entertainment, the industry was weakening. Let's check the industry as of now. It's continuing to weaken. Therefore, we are okay to short a stock like AC. If we go back to Vital, it is also near 52-week high. Currently, about 14% below 52-week high. Made a 52-week high very few days ago, but it is overvalued. Earnings growth is also coming down. So this will give a better shorting opportunity than DKS. Now, I tend to take trades only if all the forces are aligned from three levels: industry, fundamental, technical. One exception that I mentioned earlier that I allow myself to make is on the bearish side. And I sometimes allow myself to be flexible only on the fundamental side, only on the bearish trades when the market is also coming down. When the market is coming down, industry is coming down, sometimes I may ignore fundamentals, even they are strong or mixed, like in case of decay. So that will allow me to short decays if the market starts to come down. But if the market doesn't come down, then AC will still allow me to short if it breaks below the memory support in the daily. AC's earnings is also not over. It is on 18th August. So if you are trading AC before earnings, you may be careful. Today is 16th August. 18th August is just 1-2 days away. It's it it has to be in mind of the trader whether to use stocks. Certainly, in my view, not to use stocks just before earnings when trading. We didn't find many trading opportunities, neither from the star candidates nor from the Q Edge Insight stocks nor from Q Finder. Of course, we could carry on with the analysis, but the days when opportunities are there, they come much sooner than the time that we spend. When I spend 10-15 minutes, don't find many trading candidates, I know from experience those are not the best days to trade. Therefore, though my market outlook continues to be bullish because all the ETFs are bullish, sectors are overall more bullish than bearish. Finder is also weekly period more bullish than bearish. I have to be bullish, but in terms of trades, I will not probably take any trade right now. I will be happier if the market comes down, especially happier if SPY makes a new all-time high and then the market comes down, because the new all-time high may lure weak hands. And if the market comes down, they have to come out. That will give me quick short-term bearish trading opportunities. One more thing I wanted to mention. Let's look at the SPY charts. One thing I noticed, and you might have noticed also, it's not only for SPY, all the market ETFs. Let's look at the daily chart only. Here we had a low point after the coronavirus started spreading in the US. Then it has recovered all the way almost to the previous all-time high. Now look at the volumes in the recent days. It's not giving much confidence. This was the last high volume bullish day, which was where? Let's see. Here. So this was a bullish shape candle which tried to go below the memory support and recovered nicely. That was a high volume bullish candle with bullish flow color. After that, price has steadily gone up. It has never breached the memory support effectively. However, there has not been a single high volume bullish day. Only one high volume day had been there in between. That was a bearish day. That was few days ago. However, that didn't breach the memory support decisively. The volume bars, in fact, if we go back, not many high volume bullish days are there. That is not showing strong commitment of large players at least. The low volume up days are not for very large players. That's one hypothesis you may say. That is another reason to be cautious. And that is another reason if it creates a false upside breakout and comes down, the weak hands which might have bought on these days here, they may bail out, giving me a low risk shorting opportunity. I'll be happier to take those trades if that happens. Right now, I don't find many good buying or shorting opportunities. We are at the 1 hour mark. Let me end today's session. I thank you very much for joining me in these live sessions. Very happy to see you here. I look forward to seeing you in my next session on Wednesday, next Wednesday, like all Wednesdays. I will have the live traders meet that will be on Zoom as well as YouTube live. You are all using Q systems. Those who are using Q systems, they may join on the meeting so we can interact more easily on the Zoom meeting, and you may also join using the YouTube live. Thanks again. Have a great weekend. Have a good day and keep safe. See you again. Thank you. Bye bye.